Good morning, Paul Georgie from Allendale. It's July 22nd, Friday morning. The focus again today is going to be on the weather. The rains crossed Iowa late yesterday and the upper tier of counties in Illinois. Those storms are now moving off to the southeast, actually, into the eastern Corn Belt, hopefully providing some needed moisture there. Right here where our office is in northern Illinois, we got about 1.5 inches of rain last night. Crops look fantastic. So, but just as the brokers are coming in this morning, they're giving us reports of what they received where they live, and just west of us, 15 miles, they didn't get any rain. So extremely spotty moisture coming down, and I think this could weigh on the market here today, as the forecast here is for the next several days to have this pattern move across the Corn Belt in a very spotty shower type of approach, which if you're lucky enough to get rain, it's going to be great. If you don't get rain, the next chance seems to be a while off. Drew Lerner this morning in his forecast, an analysis of the GSF models, put a little drier forecast together on out into next week, which may support things here this morning. We had a quiet night in the grains overnight, and we would expect to see some buying come in here, especially if we get a dry, hot forecast at the noon hour. We expect that we'll see some buying come in here today ahead of the weekend. Other things that's going on is a battle for bearish news, the way it seems. The basis yesterday had dropped anywhere from 10 to 20 cents in the immediate cash market. Also, you've got the grain demand is starting to wane here as you look at other factors. You got the egg sets that were set here last week, down 5%. That's given us an idea that corn prices is having an impact. We're also going to be looking out ahead here in today's USDA cattle on feed report, cattle inventory report that comes out this afternoon. We're going to be checking that out to see what kind of placement numbers we've got here last month, and what kind of inventories that we got available to go in the feedlot here over the next several months are going to be some key numbers, and that's going to impact corn as much as cattle. Other news, Europe leaders have got together yesterday. They've decided that they will provide some type of a bailout for Greece again, and that is strengthening the euro, weakening the dollar. The Washington situation continues to make people very nervous here as we get close to that August 2nd deadline, and it looks like we're going to be going right down to the wire there before some type of decision is made on this debt ceiling. Other news in the grain markets, we believe, is the talk now of bean traders are starting to get concerned about the bean crop. The late planting, the lack of moisture, extreme heat is starting to concern bean traders as we look at this forecast into August. And the old rule of thumb is if you can get August rains, you're going to have a good bean crop. And some of the moisture forecasts are below normal, and that has bean traders excited, and that's certainly providing some support here in the soybean complex. In the livestock trade, cutout values were down yesterday, 165 in choice, 146 in select. The demand for beef is a big concern because of the extreme heat that we've got. Now, if we've got cooler temperatures but rainy weather here over the weekend, doesn't bode well for beef demand either, and that is causing some issues there. So we've got feedlots that are wanting to move cattle, which did move cattle here at lower money this week, and now we've got to move that product out the other end of that packing plant, and finding some resistance there as well. In the pork complex, cutout values there were up 30 cents. The story that were on the wires here overnight, talk out of Beijing that one of the ministers of development suggested that pork prices have gone high enough. They've doubled in price from a year ago. Pork expansion is just running rapid over in China, and he suggests a lot of this is happening because of hoarding or stockpiling of pork for this season, festival season they call it, between mid-autumn and the Lunar New Year, which is basically September through January. Once that demand is filled, they could have a tremendous amount of pork that is an oversupply, and they're very concerned about that. So they're trying to figure out ways to stop that inflation, and by doing that, they're thinking about releasing their pork reserves that the government has in storage. However, they've got very minimal amount of numbers of pork in storage, and as long as this continues to go on, and the stories we've seen previous about corn and soybeans in the past, this just leaves pork traders believing that they're going to have to come in and buy some pork here and ship it into China in order to halt this wild price move in pork prices over in China. So keep that in mind, and stay in touch with Allendale's research. We'll definitely keep you informed there as best we can. If you got any questions, don't hesitate to give us a call at 800-262-7538. Just a reminder, I'll be out next week for a few days doing some meetings out in Iowa and up in North Dakota. Check our website, get all the details on that, and if you're in the area, please stop in and see me. We wish you a very successful trading day. I'll talk to you on Monday morning. Thank you.